Good morning, traders, and welcome to the 24th of June 2016. And this is an absolutely massive day. It's a historic day. It's one that you're going to look back upon in years to come and talk about where you were, what you did, how you reacted. It is, of course, my 10-year wedding anniversary. I'm just kidding. It's not. It's not well, it is my 10-year wedding anniversary, but it is, of course, the day that the UK has decided to leave the EU. Now, for better or for worse, that's not the purpose of this video. Which way you voted is completely up to you. Everybody has their own votes. My brother and I, consciously didn't do any videos about the EU referendum leading up to it because we didn't want to sort of, influence anybody one way or the other. It's your personal vote. You have to decide what you think is best. We voted to remain, so unfortunately it didn't go the way that we wanted it to go. But c'est la vie. We now need to look at, how we can obviously exploit the markets, if you like, how we're going to reposition our portfolios accordingly, and how we're going to trade and make money. And the purpose of this video right here is to talk to you about how we traded last night and what our plan was and how we ultimately profited from the result. Now, as I said, we voted to remain, and we thought, we were firm believers that actually that would be the prevailing result, that we would remain in the EU. But we were still able to profit from it. And the reason for that is that we positioned ourselves in such a way that we had obviously there was going to be a lot of risk with this trade. So there was a lot of volatility there, and hence we took smaller position sizes. But we came up with a plan that sort of had limited risk. Okay, we took all of the results into account, so whether we left, whether we remained, and basically put on a bunch of positions that hopefully would have profited either way. Obviously, we left, so we profited significantly. But even if we had have remained, it wouldn't be something that was catastrophic. We wouldn't have lost a great deal of money. And actually, we were kind of the belief that even if we voted to remain, we would have made money on it as well. And basically what that was, if we jump over to the charts, I'll show you the price action moving up to the charts. I'll talk to you about, what our thoughts were, and basically show you how we structured this trade. Okay. And then obviously for future events and things like this is something that you should be able to take with you and perform your own analysis on the markets, because it wasn't just about last night's trading wasn't just about the technical analysis. It wasn't just about the fundamentals. It was about looking at the positioning of the markets, looking at the sentiment of the markets and taking all of that into account to put into a trading idea. Okay, so let's jump over to the charts right now and talk about exactly that trade. So let's look at the pound dollar chart, because this is the one where we took our position, obviously where we profited. If you look at the price action over the course of the year, you can see that actually it's been very, very much sideways. And this was one of the great clues leading into this week that caused us and sort of encouraged us to take the position that we had. Obviously, the pound dollar prior to that had been in quite a strong downtrend. As you can see, anybody goes back on these charts, you can see that it's been going down for a little while. We then have some consolidation. It then breaks down, and it's been consolidating for pretty much all of this year. So if you look at where it opened and look up until last week, it pretty much, the price, it hadn't changed all that much. Okay, so what we had going into this week, and this, as I said, this is one of the key drivers in the trade that we took, is we had a massive rally in the pound this week. All right, now prior to that, we'd looked at the IMM positioning, and we saw that that the net shorts had been increased from the previous week to the next week. So every week the net shorts were increasing. So from that perspective, we thought, okay, maybe this could be a little bit of profit taking. But then looking at the charts, okay, so if we take a look at the charts here, you can see that this here, so if there was all of that short positioning, all right, and the shorts were getting bigger and bigger and bigger, you would expect more of a down move than this. Okay, so you'd expect the market to come all the way down here, and if we were to see an unwinding of those positions, we would expect to see, not necessarily as aggressive as what we saw going into this week. So all of this here, this price action, we were talking about it yesterday and last night, and we were looking at it and we were saying, this price action, it doesn't seem like it's just unwinding of short positions. It almost looks like the markets are taking positions, in anticipation of a Remain vote. Okay, so we thought that the markets sort of had their bets on the fact that the UK would remain in the EU, and hence they were positioning themselves ahead of the vote, sort of trying to get a head start, if you like. Now, we'd also done some other research. We'd read some investment bank reports and looked at where the expectations of the pound dollar was going to be, in sort of 3-6 months time, whether we remained or whether we were out. And ultimately, by the time where we were yesterday around the 1.50 level, that was already way above where the investment banks believed we were going to be, even if we were going to remain. If we were going to remain, they kind of had bets at the end of the year being somewhere around 145 type level. Some even had it as low as 141. And obviously the leave was considerably lower within the 130. So our reasoning at that particular time is that no matter what happens here, the consensus is that the pound is going to go lower anyway. Plus, if you sit there and you look at this, prior to the event, 150, we were looking at the fundamentals. The data hasn't particularly got, very much better in the past 6 months. So we were sitting there thinking to ourselves, well, what's the difference now or tomorrow compared to where it was, last week or the week before? If we take, put Brexit aside, from a fundamental perspective, what is the sort of, why would the pound be this high? There's no reason for it to be this strong. So from that perspective, we kind of reasoned going into the vote that we should take a short position. So we took our shorts, initiated it just below sort of 150. It's around 149 something. I'll show you the exact price in a minute. So we initiated our shorts there, and our theory, our hypothesis was that if we vote to remain, we might see a spike up, okay? So we might see an initial spike up in the positions in the pound dollar, but all of the markets that had positioned themselves ahead of the vote in anticipation of that would also use that as an opportunity to take profit. So the upside potential would be relatively limited, whereas obviously on the downside, there would be more of a surprise. And hence there would be a bigger move. So from a risk reward perspective, there was much more on the table to be shorting than to be going long. So we thought if you go long, yes, there might be a pop up, but if there's a pop up, that would be sold into anyway, and we would probably use that as an opportunity to sell in at a higher price regardless. Our ultimate stop where we said that we would have to reconsider things is, if it started to go towards the 160 handle, then perhaps we would need to rethink our positioning. But ultimately, we were going to be bearish going into it, because if we vote to leave, the market would basically fall off a cliff. If we vote to remain, well, a lot of that's priced in and there'll be a lot of profit taking anyway. And that's basically how we played it. So we got in last night. And what I'm going to show you is a Facebook post here. It's between my brother and my cousin. So my cousin's into trading a little bit as well. And it's between my brother and my cousin. Basically, he posted the pound dollar chart prior to the vote. So last night, somewhere around, I guess it must have been around 8-9 o'clock. And then Nikki started commenting on it. And really the reason that I'm showing you this is just to kind of show you our thought process going into it, and to show you that we're not just talking to you about this after the fact. We're talking to you about this as it was, as it was happening. This was what was on our mind. So looking at this Facebook post, and obviously I've blurred out the names for privacy purposes, because I guess, the people that have commented on this don't necessarily want this advertised to the world. But what you can see here is, this is my brother talking about buy the rumor, sell the fact type thing. My cousin then comes across and says, haha, you reckon, Nikki, are you still undecided? And Nikki then goes and says, which is true, he said this all along. He could make arguments both ways, but in the end, he had to be in. And in terms of the pound dollar, he says, as you can see here, my gut is to sell it either way. It looks like it's priced in. And then further down, Dominic goes on to talk about, what is the volume? And Nikki said it's hard to get accurate volume on FX, which obviously it is. There's no central exchange. But the resistance is at 150, which is where we ultimately ended up selling. He said we're not going to pay too much attention to the support and resistance tonight, because support and resistance with moves in the volatility like we were expecting, they would just be absolutely blown through. He said, but we're going to dip a little toe in and add a little if there's a rally, which is exactly what I just said to you. If the market had rallied a bit, then we would have sold into it, because we were firm believers that whatever the result here, the market would have sold off at least somewhat. And then after the polls in Newcastle came out, the market it tanked. It dropped 300 pips in a couple of minutes. He says this is literally a 300 pips fluctuation. You day trading this right now. And he said sort of kind of day trading. We're looking for other opportunities to add to our positions. We got short at 14973 and monitoring it. Ready to add if the leave gains momentum. And again, this was at that sort of time when only a few areas had come out with their votes, and it was still sort of quite 50-50 either way. And then eventually at the end, we ended up covering all of our positions at one spot, 3750, because we sort of thought that at that sort of level there, if the market continues to go lower, and it did go lower, it went down to 133. Hitting sort of record lows, or at least I forget what it was, like a 35-year low or something like that. We thought that there could be risk of central bank intervention at that sort of level, and by that moment in time, we'd made over 1,000 pips for just a few hours worth of work, and decided to take profits and go to sleep. And obviously, then woke up this morning with the vote being that we eventually decided to leave. Now, the reason that I've shown you this trade here is not because of a technical reason for getting in. It's not because there were, strong fundamentals. Either way, it was to do with reading the market, reading the story of the market. And this is something that I talk to our students about all the time. You can't just trade blindly. You have to take into account the context of what you're trading. And the price action leading into this week, the way that the market basically rallied 1,000 pips, to Nikki and I said, more than this is just, profit taking, so there'll be a significant reaction either way. That said to us that a lot of the market were already positioning themselves for a Remain vote and then would sell in on the bounce up from that, use that as an opportunity to take profit. So from our perspective, yes, obviously there was risk there, okay, because there was a lot of volatility in the markets last week. So there was a significant amount of risk there. But from our perspective, we kind of reasoned and we thought that regardless of what the vote was, the pound dollar would have sold off somewhat. Whether it had been today, whether it had been in a week's time or in a month's time, we reasoned that at 150, that wasn't fair value for the pound. And, ultimately we would see the pound lower at some point in time. Obviously we had our stops there. We knew where we were going to get out. We knew what our plan was. But yeah, that's the way that we play the markets, and that's the way that we want to obviously help you guys and educate you to be able to do the same thing. Where are we going to go from here? Well, the markets, as you can see, the FTSE is down this morning, just this morning. I think it's about 10% already. The pound has rallied somewhat already, which was completely expected. If you're trying to sell it right now, you're probably going to be late to the party. We're going to need to wait for the markets to take a little bit of a breather over the coming days, maybe even over the coming weeks before, we see, some real direction. Yes, there could be further downside, but it has gone a long way right now. So at some point that's going to be extreme, and the markets will obviously stabilize. So at the moment for today, we're wrapping it up for today. There's going to be no more trading today. But we will obviously come back and look at this next week. And if you watch and if you pay attention to our Forex focuses, maybe we'll talk about our plans for next week, this coming weekend. So keep your eyes peeled for that. Thank you very much for watching. I hope you enjoyed it. I hope you kind of understand some of the reason there. And you can maybe start to build this into your trading, into your approach to the markets. Okay, so thank you very much for watching. Have a really, really good day out there, and have a lovely weekend. Happy trading.